Wall Street Circus is back in town, and this time the clowns are juggling tickets instead of bananas. It's September 2025 in New York, and StubHub, the little kit resale platform once mocked as a fancy scalper's stall, has strutted into the big leagues, filing for an IPO that could value it at more than $9 billion. $9 billion for a company that doesn't even own a single stadium seat. The bankers are frothing at the mouth. Goldman Sachs, Morgan Stanley, JP Morgan, all of them acting like proud parents. Except the only baby they've delivered here is a 200-page prospectus filled with numbers most of us wouldn't bother reading if we were stuck on a train without Wi-Fi. They're promising riches to anyone with the stomach to buy in, and they've got good reason to be cocky. The IPO roadshow is oversubscribed 20 times over. Investors are practically elbowing each other in the ribs to get a slice of the pie. But then, bang! In the middle of all the champagne and spreadsheets, a proper scandal explodes. Jeff Fluhr, one of StubHub's 2 original co-founders, opens up the S1 filing, the document meant to tell the world exactly who built this empire, and finds his name has been erased, gone, wiped out. According to the paperwork, the company had just one founder, Eric Baker. The same Eric Baker who once got himself fired from the very business he helped create. Fluhr takes to LinkedIn and Twitter, or X, spitting fire like an angry Victorian ghost who's just discovered his obituary left out half his achievements. He accuses StubHub of rewriting history, of painting him out of the picture in some bizarre Silicon Valley act of corporate revisionism. Imagine spending years building something from scratch, dropping out of Stanford to run it, only to be erased from the official story 2 decades later. It's the business equivalent of being uninvited from your own bloody funeral. And of course, the media jumps on it. Axios, Fortune, Bloomberg. Every headline screaming about the co-founder feud, just as StubHub tries to woo investors. The timing couldn't be worse, but in a way, it's perfect, because this ridiculous fight sums up everything about StubHub's history. Betrayal, revenge, absurd timing, and billions of dollars flying about like confetti at a wedding no one particularly wanted to attend. You see, StubHub isn't just another startup to IPO tale. No, this one reads like a parody, the sort of nonsense you'd expect someone to invent for a television drama. 2 business students struggling to get tickets to the Lion King. That sparks a billion-dollar idea. One founder gets unceremoniously booted out of his own company, only to return a decade later to buy it back for more than $4 billion. That's not business, that's Shakespeare with service fees. And then, just when you think the story's over, here comes an IPO battle with erased names, bloated marketing budgets, and losses piling up faster than Arsenal's trophy drought. It's ridiculous, truly ridiculous. But every bloody word of it is real. Now, before we dive headfirst into this lunatic tale of tickets, tantrums, and billion-dollar betrayals, do us a favor, hit that subscribe button, because you won't want to miss more stories like this. Strange business histories so bizarre they sound fake, until you realize the madness of the real world beats fiction every time. Now, let's rewind the tape. Before the bankers in pinstripe suits and billion-dollar valuations, before the lawsuits and IPO scandals, it all started with something laughably ordinary. 2 young blokes at Stanford Business School who just wanted to see the Lion King. Yes, that Lion King, the Broadway musical, the one with the bloke in a furry suit singing about circles of life. Hardly the sort of thing you'd expect to spark a multi-billion-dollar empire, but that's exactly what happened. The year was 2000. Eric Baker and Jeff Fluhr were fresh-faced first-year MBA students, both ambitious, both eager to prove they weren't just over-caffeinated debt collectors in training. Like every other 20-something in Silicon Valley, they fancied themselves entrepreneurs in waiting. And yet, their grand idea didn't come from staring at spreadsheets or attending some lecture on disruptive markets. It came from trying and failing to buy a couple of tickets. The problem was simple. Resale tickets were a complete mess. You either risked being scammed in a parking lot by some bloke with sweaty palms and photocopied tickets, or You forked over a fortune to scalpers who operated in the shadows with all the charm of used car salesmen. Baker and Fluhr discovered this the hard way, struggling to get into shows like The Lion King and concerts like the Grateful Dead's endless farewell tours. And as they grumbled about it in their dorm, the thought hit them. Why not fix this mess ourselves? So they did what any good MBAs would do. They turned misery into a business plan.
All of my experience prior to StubHub was sort of in the financial services business, which is not an operating company. Generally speaking, I think it takes years to build a successful standalone company, and I think StubHub was no exception to that. And I imagine Recast will take time as well.
The pitch was deceptively simple: an online marketplace where you could buy and sell event tickets safely. No dodgy parking lot exchanges. No risk of counterfeit stubs. StubHub would guarantee authenticity, handle the transaction, and pocket a tidy fee along the way. And here's where the grumpy Brit in me has to groan. Of all the industries crying out for revolution, energy, transport, healthcare, they picked ticket scalping.
So as we sit here today, it is not, because most of the live events where we've seen cancellations have really been in China and a few in Taiwan and Singapore. Obviously, most important for everybody, we hope that they get it under control and that they solve the health crisis.
Yeah.
But right now, it's been isolated to Asia specifically, and mostly China.
Bloody ticket scalping. But to their credit, they weren't daft. They saw what everyone else ignored. People will pay a premium for peace of mind, especially when it comes to live events. Nobody wants to show up at a Coldplay gig and discover they've bought a ticket to row imaginary, seat non-existent. By 2001, StubHub officially launched. The idea spread like wildfire. Sports fans, theater buffs, music lovers all suddenly had a safe way to offload tickets they couldn't use or grab seats to sold-out shows without fear of getting swindled. The secret sauce? StubHub's famous Fan Protect guarantee. If your ticket turned out to be fake, they'd refund you or replace it. That simple bit of trust turned millions of skeptics into loyal customers. Within just a few years, StubHub was shifting tickets by the millions. By 2004, they'd already crossed the 1 million tickets sold milestone. No small feat for two blokes who started with nothing but frustration and a laptop. Stadiums and arenas that once relied on shady resellers suddenly had to acknowledge this new digital middleman muscling into the business. Of course, it wasn't all smooth sailing. Ticketmaster and other entrenched players weren't exactly thrilled. To them, StubHub looked like a parasite, skimming fees from events without ever putting on a single show. Lawsuits, angry press releases, and mutterings of regulation began to swirl. But Baker and Fluhr didn't care. They were too busy raking in transactions and turning their dorm room idea into a growing Silicon Valley darling. This wasn't just about selling tickets. This was about changing culture. Before StubHub, resale was the Wild West, dangerous, unpredictable, and often illegal. After StubHub, resale became mainstream, polished, and, dare I say, respectable. Suddenly, buying a ticket at double the price didn't feel like being fleeced by a bloke outside the stadium. It felt like just another online transaction, as normal as ordering books off Amazon. And yet, within 7 short years, StubHub would be sold to eBay for hundreds of millions. And within 2 decades, it would be at the center of one of the most ridiculous founder feuds in modern business history. But let's not jump too far ahead. Right now, in the early 2000s, it's just 2 lads who couldn't get tickets to The Lion King, staring at their screens and wondering if their little ticket site might actually be onto something. Little did they know, they were about to create one of the most chaotic, backstabbing, and bizarre sagas the business world has ever seen. By the mid-2000s, StubHub wasn't just a cheeky experiment from a couple of Stanford blokes. It was a growing beast. The company had cracked the code on something both obvious and maddening. People wanted tickets without the stress, and they were willing to pay fees thick enough to make a banker blush. Every successful transaction built momentum, and pretty soon, StubHub was handling events across sports, theater, and music. It wasn't long before the big dogs noticed. And in Silicon Valley, when the giants notice you, one of two things happens. They either squash you or buy you. In StubHub's case, it was the latter. eBay, the great auction house of the internet, decided that tickets were just another product line to be conquered. In 2007, they whipped out their checkbook and bought StubHub for a cool $310 million. To put that in perspective, we're talking about a 7-year-old company built on the back of Lion King tickets and frustration with scalpers suddenly fetching a price tag that could buy you an entire Premier League football club at the time. For Baker and Fluhr, it was vindication. From scrappy MBAs to multi-millionaires, before most of their classmates had even finished paying off their tuition fees. But this is where the fairy tale splits into tragedy. You see, big corporate takeovers are rarely as cozy as the press releases make them sound. Behind the scenes, power struggles were brewing. Eric Baker, brilliant, stubborn, unwilling to bend, clashed with eBay executives almost immediately. He was the sort of founder who refused to play nice, insisting on running things his way. Fluhr, by contrast, had slid more comfortably into the role of corporate diplomat. The tension grew unbearable. Decisions were being second-guessed, strategies challenged, egos bruised. And then came the knife twist. Baker was forced out, fired, removed from the very company he'd built from scratch. The official timeline gets fuzzy. Some accounts say it happened before the sale, others shortly after. But the outcome was the same. Baker, the man who'd co-invented the very idea, was shown the door while his partner stayed on to cash in. Now, most of us, if we'd been tossed aside like that, would have sulked, maybe fired off a bitter blog post, and then gone off to lick our wounds. But not Baker. He was already plotting his next move. In fact, whispers suggest he'd started sketching out his rival platform, Viagogo, as early as 2006, before the eBay deal had even gone through. Talk about holding a grudge. Imagine the audacity, being kicked out of your own company and immediately deciding, fine then, I'll build another one to crush you. It's the kind of stubborn streak that borders on madness, but in Baker's case, it became his defining trait. Fluhr, meanwhile, walked away with pockets lined from the eBay sale. He would later parlay that success into co-founding DraftKings, the online betting juggernaut, which went public in 2020 and turned him into a billionaire all over again. Not a bad outcome for someone erased from StubHub's official IPO filing years later. But at this point in our story, he was still very much the company man, collecting his payout and keeping his head down while Baker stewed in exile. The whole saga was absurd, even by Silicon Valley standards. A ticket resale site, essentially a middleman charging people more for things they already wanted, had become a $310 million trophy. And yet, instead of enjoying their spoils together, the co-founders were now on opposite sides of a bitter divide. eBay, of course, thought it had pulled off a masterstroke. With StubHub under its wing, it could dominate the secondary ticketing market and slap its brand across every resale transaction. But they underestimated one thing: Baker's appetite for revenge. Being fired didn't break him. It lit a fire under him. While eBay integrated StubHub into its sprawling empire, Baker was already sketching out a plan to build a rival operation in Europe, one that would one day come back to haunt the very people who'd pushed him out. And here's where the tension between the gentlemen ratchets up. Because this wasn't just another founder's exit, this was the start of a personal vendetta. A man cast aside who refused to fade into obscurity. A disgraced co-founder determined to prove he was the true mastermind. By the time StubHub was celebrating its eBay-backed expansion in America, Baker was laying the foundations of Viagogo across the Atlantic. A new empire rising quietly in the shadows, preparing for the day it would come face to face with its old rival. What started with the Lion King had turned into something closer to Hamlet. Betrayal, pride, and a ghost of the past refusing to rest. Only in this version, the skull being held aloft was a $400 nosebleed seat to see Beyoncé. So, Eric Baker was out, fired, sidelined, written off. Most people would have slunk away into obscurity, perhaps opened a wine bar in Palo Alto, and dined out on the I could have been someone story. For the rest of their lives, not Baker. He was far too bloody stubborn for that. Instead, he packed his bags and crossed the Atlantic. If America didn't want him, Europe would do just fine. There he began building Viagogo, an international ticket marketplace that looked suspiciously like StubHub with a slightly different paint job. By 2006, while eBay was congratulating itself on owning the shiny new StubHub, Baker was quietly laying down rails for a rival empire. What started as a small foothold soon ballooned. Viagogo expanded into over 200 countries, selling tickets to football matches, festivals, and anything with a crowd willing to overpay. From the Premier League to the World Cup, Baker's new company became the go-to marketplace for fans desperate enough to pay nosebleed prices. Regulators grumbled, consumer watchdogs barked, but Baker kept moving forward. And here's the delicious bit. The very man who'd been fired from StubHub ended up running its fiercest competitor. A Shakespearean twist, if ever there was one. Though in this case, the dagger wasn't in someone's back, it was in their profit margins. By 2019, Baker had grown Viagogo into a machine. And then he made his boldest move yet. He decided to buy back the company that had cast him out. For $4.05 billion in cash, Viagogo acquired StubHub from eBay. Think about that. He was once forced out of his own creation, and 15 years later, he strode back in as its owner. That's not just a business deal. That's a revenge story to tell your grandkids about. The timing? Well, it was almost comically bad. Just weeks after the acquisition closed, COVID-19 tore through the live events industry like a wrecking ball. Overnight, concerts were cancelled, stadiums went silent, theaters shut their doors. StubHub and Viagogo were left sitting on billions of dollars in tickets for events that no longer existed. Refund chaos followed. Customers demanded their money back. Venues panicked. Lawsuits started piling up. Suddenly, Baker's crowning triumph looked like the stupidest financial decision in modern history. Imagine dropping $4 billion on tickets, only for the world to collectively decide it's staying home in its pajamas. But here's where Baker's iron stomach came in handy. While smaller resellers collapsed, StubHub holdings scraped through. Refund policies were tweaked, payment terms renegotiated, and slowly the bleeding stopped. It was ugly. Angry customers, regulators circling. The company's reputation battered, but they survived. When the pandemic finally loosened its grip, demand for live events didn't just rebound, it exploded. By 2023, people were desperate to leave their living rooms. Taylor Swift, Beyoncé, the Olympics, you name it. Tickets were selling like hotcakes. StubHub's platform processed billions in gross merchandise value, roaring past pre-COVID levels. Baker's timing, which had seemed disastrous, suddenly looked visionary. The numbers tell the story. In 2024, StubHub's GMS surged to $8.7 billion, up 27% from the year before.
It's giving StubHub a valuation of $8.6 billion. Shares are expected to begin trading today on the New York Stock Exchange under the ticker symbol STUB. I don't know where they got that.
Revenue climbed to about $1.65 billion. Their model, no inventory, pure fees, kept gross margins fat at over 80%. And all of it flowed into StubHub Holdings, the Frankenstein hybrid of StubHub and Viagogo. The business was no longer just a secondary market sideshow. It had become a global duopoly, dominating resale across continents. Competitors like SeatGeek and Vivid Seats fought for scraps, while Ticketmaster, part of Live Nation kept a wary eye on Baker's growing empire. The irony was impossible to ignore. The man who'd once been fired from StubHub now ran StubHub. The man told to leave the party was not only back inside, but dancing on the table. Of course, being Baker, he didn't bask quietly. He doubled down. Global partnerships were signed. Major League Baseball, FIFA, and NBA teams plugged directly into StubHub's systems. AI pricing tools were rolled out to fend off scalpers' bots. Fraud detection tech was beefed up with a $100 million investment. The message was clear. This wasn't just about surviving. It was about expanding, conquering, and cementing control. But in the shadows, trouble lingered. Regulators in the UK fumed about price gouging. American lawmakers muttered about caps on resale markups, and customers, while grateful to attend concerts again, continued to moan about StubHub's infamous hidden fees that turned $200 tickets into $280 charges at checkout. Still, Baker pressed on, convinced that scale and dominance would silence the critics. And for a time, it worked. Investors began whispering that StubHub might one day go public. Private valuations in 2024 soared as high as $16.5 billion. From exile to empire, Baker had pulled off the sort of comeback story that would make even the most cynical observer raise an eyebrow. And yet, as we'll see, the return of the Ticket King was not the end of the saga, because the bigger the empire, the more cracks begin to show. By the time lockdowns lifted, StubHub was standing on shaky legs. The pandemic refund chaos had bruised its reputation.
But New Yorkers are in luck. StubHub is required to issue New Yorkers and consumers in 13 other states refunds due to the state's consumer protection laws. 7 Eyewitness News and The Rebound Buffalo brought this to StubHub's attention on Morales' behalf. The company says it's now issuing her a full refund.
Drained cash and left Baker looking like the man who bought a sinking ship. But then the tide turned, fast. The world came roaring back to life. Stadiums filled, arenas thundered, and desperate fans were willing to pay any price just to hear live music again. StubHub's platform became the beating heart of this frenzy. Taylor Swift's Eras Tour was the jewel of 2023 and 2024. Tickets vanished in minutes, resale prices soared, and StubHub handled so many transactions, it smashed its own records. Beyoncé's tour, Premier League clashes, even the bloody Olympics. Everything was selling out, and StubHub was clipping fees off the top, like a casino raking chips. The numbers were staggering. Gross merchandise value surged to $8.7 billion in 2024, up more than a quarter from the year before. Revenue hit about $1.65 billion. With an 82% margin, StubHub was printing money on paper, even as marketing spend ballooned to nearly $800 million. This wasn't just survival, it was domination. Baker's empire now stretched across 200 countries, thanks to the Viagogo integration. Roughly 45% of US ticket resale flowed through StubHub, with Europe and Asia catching up fast. For fans, the name became unavoidable. For regulators, it became a target. That's the rub with success. It attracts enemies. In the UK, watchdogs accused StubHub of letting sellers gouge desperate fans. In the US, lawmakers started muttering about caps on resale markups, and customers kept venting about the dreaded service fees, which could add $50 to a $200 ticket without warning. Baker's response: double down on technology and partnerships. In 2024, StubHub rolled out an AI-driven pricing system to fight bots. Fraud detection got a $100 million upgrade. Spotify integrated StubHub listings directly into its app. For investors, this was catnip. Wall Street analysts were practically begging for an IPO, convinced StubHub was now too big to ignore. But the empire's strength carried risk. Marketing spend was spiraling out of control, losses were widening, and regulators weren't backing down. The business model, charging hefty fees without touching inventory, was brilliant, yes, but fragile. If regulators ever clipped the margins, StubHub's towering growth could wobble fast. Still, to the outside world, Baker looked like a man redeemed. Fired once, ridiculed during COVID, he now stood atop a global ticketing empire. Investors could smell the IPO coming, and fans, begrudgingly, kept handing him their money. Of course, just as the champagne corks were popping, another storm was brewing. Because when StubHub finally filed its paperwork to go public, the old ghosts returned. The co-founder feud, long buried, exploded back into the open. By early 2025, StubHub was finally ready to strut onto Wall Street.
As a group, I think they made as much money in one day as Apple makes from its international sales in one day. I mean, it's an insane sum of money.
After months of speculation, the company filed its S1 with the SEC in March, aiming for one of the biggest tech IPOs of the year. The target, up to $851 million in proceeds, a valuation topping $9 billion, and the ticker symbol STUB. Investors lapped it up. The reports said the offering was oversubscribed 20 times over. Demand so wild it looked like fans queuing for Taylor Swift tickets. But instead of celebrating, the spotlight veered straight to a scandal. The S1 credited only one founder, Eric Baker. Jeff Fluhr, the other half of the original duo, had been erased. Not just minimized, erased. Fluhr erupted. He posted on LinkedIn and X, blasting the company for revisionist history. He reminded everyone that he'd been CEO for years, that he'd dropped out of Stanford to run the business while Baker handled the tech. He argued that without him, there wouldn't have been a company for eBay to buy in the first place. And now, on the eve of its IPO, he'd been scrubbed from existence. The timing was brutal, just as StubHub tried to dazzle Wall Street with charts of soaring revenue and fancy AI features. Headlines were plastered with a different story. A co-founder feud, raw and unresolved 2 decades later. Axios called it the IPO with a ghost in the room. Fortune described it as corporate amnesia. Baker, for his part, kept quiet, letting the paperwork and the billions speak for him. Meanwhile, the financials told a complicated tale. StubHub had momentum, $827.9 million in revenue for the first half of 2025, up slightly from the year before. Gross merchandise value hit $4.4 billion, a solid 11% growth, but losses were ballooning. The company posted a net loss of $111.8 million in just 6 months, more than double the year prior. Marketing costs were eating them alive, topping $400 million in the first half alone. Still, the bankers didn't care. The pitch was simple. StubHub was a global duopoly alongside Viagogo, with fat margins and decades of live event growth ahead. Investors didn't see messy founder disputes. They saw cash flow. They saw a business that could tack on $500 million in free cash flow every year while expanding into Asia and Latin America. The irony, of course, was hard to miss. 2 men had created the company. One had been fired, built a rival, and returned as the conquering hero. The other had cashed out, moved on, and later built another billion-dollar firm in DraftKings. And yet, here they were, 25 years later, still fighting about who deserved credit in a prospectus. The story overshadowed the roadshow itself. Instead of endless chatter about revenue multiples and international expansion, analysts debated whether Baker had staged the ultimate rewrite of corporate history. Journalists pounced on the narrative. Was this the ultimate revenge arc, or a cynical erasure? For the grumpy among us, yes, me included, it was proof that Silicon Valley can't help but turn success into melodrama. It wasn't enough for StubHub to be a billion-dollar empire. It had to be a soap opera too. Yet for all the noise, the IPO was a hit. Priced between $22 and $25 a share, It promised to raise around $800 million, most of it going toward debt repayment and tech upgrades. Baker himself planned to offload some of his holdings, cashing in even as he cemented his status as the face of the company. And that's the final twist. Fluhr may have been erased on paper, but Baker had written himself into the history books. Fired in disgrace, he'd bought his company back for $4 billion, steered it through a pandemic, and now stood on the verge of ringing the bell on the New York Stock Exchange. But make no mistake, the cracks were there. Rising costs, regulatory heat, angry customers, and an old feud threatening to tarnish the shine. Wall Street might cheer, but beneath the confetti lurked the same question that has haunted StubHub from the beginning. Was this business built to last, or was it just an elaborate ticket flip dressed up as a tech company? If I told you this was fiction, you'd laugh me out of the room. But it's not. It's all real. StubHub's story proves that business history doesn't need exaggeration. It's already ridiculous. And here's the kicker. They sell tickets. They don't build rockets, cure diseases, or power cities. They flip tickets. Yet somehow this parade of betrayals, comebacks, and inflated service fees has created an empire powerful enough to make Wall Street swoon. Right. Well, if you've enjoyed this tale of chaos and corporate nonsense, do us a favor. Hit that subscribe button. Because I've got plenty more stories of strange business sagas that'll make you shake your head and wonder how on earth these people got rich while the rest of us are stuck queuing for the cheap seats. Bah! Humbug!